Hi there, welcome to Kneppy Invest. It is Saturday, and do you know what that means? It means it's time for another answer and reply video. There was a brief moment this morning, and when I say brief, I'm talking about a few seconds, where I thought maybe today is the day where I break my streak of recording and releasing a video on this particular channel. I can't remember the last time I didn't release a video on a day. So maybe it was like 6 months ago. And I thought if I didn't release a video, that could cause a bit of confusion out there among viewers of this channel, because maybe you're expecting me to release a video every single day. So there was a brief moment this morning where I thought, maybe today's that day where I don't release a video. And then I came to my senses. I thought I had a little bit of time on my hands on this Saturday, and why not answer and reply to a few of your comments and questions. Okay, so let's go back 3 weeks ago. There were a couple of questions, well, not questions, a couple of comments in regards to how hard I work. Here's one from Sensei, Kneppy working hard, even on a Sunday, the way it should be. Every day is a work day to get better and improve. I actually do agree with that last bit. I do strive to improve all the time. I don't consider that working at all. In fact, even if I fully retired, I'd be trying to improve myself every single day. Why not? I don't see why people just stay where they are and try not to be a better person. So I try to be a better person, better investor every single day, but I don't consider that working hard. Releasing these sort of videos, or even just recording these sort of videos, I don't consider that work even. So the only thing I really do when it comes to work is my part-time job with the Bureau of Meteorology. And when you consider I am part-time, I'm working 4 shifts every 18 days. I have a lot of spare time. And in my spare time, I wouldn't consider myself working hard. Anyway, so thank you for that, Sensei. I don't consider myself working hard, but I do strive to improve myself every single day. Okay, and there was another question or not comment. Oh, in fact, it was from the same person, Sensei. Appreciate consistent hard work, Kneppy. And then talking about daylight saving. So the same person just talking about how hard I work. Now, Josh Tim says Douugh, D-O-U, Tico, D-O-U-G-H. Speculative stock has this been re-rated once the takeover is done? I know absolutely nothing about this company, I'm afraid to say. Well, I'm not afraid to say. Oh, it doesn't have the GH, but I didn't realize there was 2 U's in the name. Douugh. Share price is below 1 cent. So straight away, I'm not that attracted to this company. Share price is below 1 cent. So I do have a rule: don't invest in companies whose share price is below 1 cent. So I have been thinking about increasing that to 2 cents. But at this point in time, it's 1 cent. So I'll need to see this company share price increase, or they do a share. One of the ways they can do that is just do a share consolidation, or another way is to grow their financials, become profitable, cash flow positive. Now, you're talking about a takeover. Don't know anything about this company. There was a price and volume query. Douugh to acquire US business-to-business fintech, RBDX. So what I am going to do, and even though this is 3 months late, I'm going to have a look at the most recent cash flow report. Can't even tell you what this company does. Maybe fintech, something to do with financials. And the reason I say that is just because Douugh money. That's all I can think of. And let's have a look at their about section first. Award-winning fintech company. Oh my God, I can't believe I sort of got that right. But other than that, I can't tell you what they do. On a mission to help customers manage and grow their money to build long-term wealth. To be honest with you, that tells me nothing about the company. They are fintech, but what do they actually do? Now, they say they help customers manage and grow their money, but how? How? I actually don't mind what they say here. Help customers manage and grow their wealth to build long-term wealth. That sounds really good. Okay, so let's have a look at the Appendix 4C. Cash receipts, 142,000. It's not that high. Operating cash flow negative by only $97,000. So this is a pretty lean machine. So they don't spend a lot of money. So this company must be quite small. And if you have a look at the year, $536,000 in receipts, and actually were operating cash flow positive because they received government grants and tax incentives, which was $1.6 million. So there's not much to this company at this point in time, and I would assume the markup of the company. Let's have a look at that. Where's my what's it called? Where's market index? I have to open up a new tab. I'm assuming the markup of this company. Let's have a guess. $7 million. $9.7 million. That seems fair enough. No idea about this. What's it called? This takeover is done. Maybe it's a good takeover. I have no idea. So let's have a look at the chart. So typically when I don't know much about a company, the next thing I do is have a look at the chart. And the chart's starting to look okay. Now, wasn't that long ago, share price was like 0.3 cents. So there are a few things to like about this chart. The first thing is the share price has actually taken off. Share price reached a high of 1.7 cents not that long ago. Now it's down to 0.9 cents. So a few days ago, I wouldn't have minded this company because the share price was above 1 cent. The other thing to take note is the really big volume coming in. There was a spike in volume on the 27th. That was the day they announced this takeover or acquisition. And then also there was another share price rise and a volume rise on no news. That was back on the 18th and 21st of October. So I'm not sure what caused that. Share price went from 0.5 cents to 1.7 cents. So I suppose there's a bit of speculation here, a bit of day trading, that sort of thing happening with Douugh Limited. But otherwise, financials, chart up until recently, you'd have to know this acquisition a little bit more. I'm just going to open it up right now. US fintech something or other. How much do they pay for this particular acquisition? Do they actually mention it here? Or this company RDBX apparently is cash flow positive in their operations. Well, that's positive and generated revenue of 1.1 million. So another lean machine. And they also secured $1 million in working capital. Okay. So what do they do? Fraud monitoring, card issuing, processing, transaction accounts, AI-powered credit decisioning and collections, robo-advisory and share trading, account-to-account payments. Seems like they're fairly small, but the material terms of the acquisition issued shares of almost 1 billion shares at 0.5 cents. Yeah, okay. Now, the interesting thing about this acquisition is they are acquiring a company that is operating cash flow positive. However, that's on a revenue of only about $1.1 million. So it's a fairly small company. And seems like maybe that's what has got the market interested. I am not at that point just yet with Douugh with 2 U's. Mr. Chokesinakura, what do you think about Pexa? So this has something to do with real estate, this company. And I do know they're expanding into England, and this sort of technology is not available over there. So that's why they might be very or quite successful. So I'm not sure exactly what they do. World-leading digital property exchange and data insights business. Now, I have heard, maybe not horror stories, but I have still heard stories about what happens in England when it comes to property transactions, that sort of thing. And the technology that Pexa has might be changing the way they do stuff over there. So they are expanding there. And if they are quite successful with their expansions into UK, there is potentially significant growth for this company. Now, Pexa does have a fairly big markup, so valuation of maybe $2 billion, $2.44 billion. And I don't think the company is, I think they are just operating cash flow positive. So the company does, or they did, pretty sure they did release Appendix 4C. I could be wrong, actually. Let's go back to, no, they don't. They don't. I thought that maybe they did release Appendix 4C. So let's just go to their 4-year results. And I have a feeling they might be just profitable and cash flow positive. Fair bit of revenue. So $340 million of statutory revenue. EBITDA positive, 114.9 million. But profitable, no, they're not profitable. Group statutory profit, negative 18 million. earnings per share and PATA basis. So if you take away what's NPATA? Net profit after tax and amortization. So if you take away the amortization, the company is profitable, and they were free cash flow positive 38.5 million. Pretty good growth from last year, where it was 14 million. So there's a lot of potential already priced into this company's valuation, and I think a lot of that price is around their expansion into UK. Now, I don't think that's fully priced in, and if they are successful, there is quite a bit of potential around this company. I'm not sure how mature they are in Australia. Don't know that. But the other thing is a chart. So the chart for Pexa. So that's a weekly chart or daily chart. They listed, I'm pretty sure Pexa was spun out of, who were they spun out of? They were spun off someone big. Pexa spun out of who? Pexa spun out. I keep wanting to say Lend-Lease, but I'm pretty sure Lend-Lease. Or Link Administration, that's right. Link Administration. Now, spun out of Link Administration. Yeah, Lend-Lease didn't sound right. Link Administration, this was quite a few years ago. Yeah, 3 years ago. And in fact, the share price right now is below the price where it spun out. You can see, in fact, the share price was in a pretty nice downtrend, falling from about $21 down to $10. So share price halved from January 2022 to October 2023. That downtrend has come to an end, and the share price, you could say, is moving up in a very slow pattern, very slow, and the share price has pulled back a little bit. So if you put sort of an uptrend line here, there's a bit of an uptrend line there, yeah. So that's the uptrend right there. It's following it quite well so far. So the share price falls to about $13.60 over the next few trading days. That's right on the uptrend. So that could be maybe a good time to take a position in this company, particularly a trading position. Valuation-wise, no idea. Already a market cap of $2.4 billion. So there is a bit of speculating when it comes to determining the valuation or fair value of this company. You could ask a few different investors to do some sort of DCF or some sort of fair valuation analysis of this company, and you could get a massive range of different numbers. That's the problem with these sort of companies that have potential a lot of growth in the future, but whether they realize some of their growth is up in the air right now. So I would probably, if I had to do anything, I'd more likely just trade this. And if I see the share price starting to turn downward, that would be a nice little get out of jail free card, because if things go badly for this company, share price could drop a lot. That's if they go badly. But if things go well, share price could go up a fair bit. I just have no idea which way they're going to go. And that's why I would more likely trade this than anything else. Unless I see their financial numbers just go crazy and go nuts. And there's actually proof that they're expanding, their expansions into UK are doing well, or is doing well. Anyway, that's Pexa. Just a bit of a drink. Hi, Kneppy. I'm very pleased with my Baba holdings, Alibaba, have been DCAing, dollar cost averaging, for over a year. Not for the faint of heart. What Aussie sectors are now moving higher? Up your watch list. Ideas for stock highlights, videos in Q4, AccuSensus, Wiser, and Domino's. I'm just going to talk about Alibaba because I had a look at this chart actually this morning, funny enough. I am a shareholder of Alibaba. I do think there is potential value, and the share price or the chart has turned around. It's quite obvious. We have seen a little bit more positive sentiment coming into this company, and the valuation looks intriguing to me. Now, we have seen share price pull back. This is a good sign. So around $96 could be, or this between say 195 could be a good zone to buy some shares. But what we need to see, or what I would like to see, is a share price starting to go higher soonish rather than lateish. And then I'd like to see the share price get to above $120. I want to see another higher high from here. And valuation, I can't complain about the valuation. P ratio is, well, it's 25, but I think that's on low profit the last year. No, it's not. Now, it wasn't long ago that this company had profits that was double what we're seeing now. So they could double their profits and quite easily, probably. Anyway, so that's Alibaba, and you can see share price has started to go higher. I think the trend is shifting, and also sentiment is also shifting, but this is a Chinese-based company, and I have no idea what's going to happen in China. And what Aussie sectors are now moving higher up your watch list? I don't really follow sectors all that much, to be honest with you. I don't really look at sectors. There are areas that I think could do well over the next few years, like data centers or anything to do with AI, that sort of thing, infrastructure, electricity infrastructure, that sort of thing. I think there is potential, not only in Australia, but also overseas. That sort of infrastructure has been neglected over the past 10 to 20 years. And I think there has to be a significant improvement in infrastructure in this country when it comes to electricity and that sort of thing. So that's one sector I do like, or area I do like. It's not really a sector. So there's no real sectors I want to heavily invest in. Anyway, AccuSensus, chart looks actually interesting, AccuSensus. They did release their Appendix 4C recently. I did trade this a while ago. It was a failed trade because they lost, not lose, they didn't win a couple of contracts. And the market had a hissy fit about that. And then the other day they announced a contract. So in fact, this chart looks much better than when I traded this back in early this year. So it's only taken about 6 to 7 months for the sentiment to shift back to positive. And WZR, I think WZR, WZR. Am I seeing any promise? Just not quite there just yet with WZR. Nothing I'm seeing in the chart is getting me excited. And what's the other one? Domino's Pizza. This one actually is interesting. So I do own some shares in this. And I had a look and I went, oh, there is potential. We have seen the end of the downtrend. I'd like to see the share price bounce off $34 and then get past 38. That would be really a powerful sign. So I do think there is some short-term positive sentiment in Domino's, and possibly even the share price is moving into at least a neutral trend, if not a positive uptrend, or just an uptrend, not a positive. Yeah, I don't think you can have negative uptrends, just an uptrend. But that could happen, it could not. Don't know just yet. But things are starting to turn around, maybe for Domino's Pizza. So thank you for those questions and comments, Alex. Tee-hee-hee. 8-day traders for BF. 8-day traders for boyfriends. 8-day traders for bovine farmers. 8-day traders for breakfast. Thanks for the daily uploads, Kneppy. AQZ Alliance is up 16% in 3 or 5 days without any news. Maybe they are going to get Bonza's share market. AQZ Alliance Aviation. We can see going on a massive tear. One of the reasons I like these questions, one of the reasons I like answering these questions or comments 1 month after they've been written, or 3 weeks after they've been written, is you can see what's happened since then. And there was a nice little run in the share price, and then since then the share price has pulled back. I do have this downtrend line, which I can extend, and there's also this support area at 275. So these been in place for a while, yes. So this support line has been in place since May 2023, and the downtrend has been in place since early 2021. So you can see both of these are converging, and eventually they are going to converge, and once they get close to converging, we'll have a breakout either below the support line or zone or above the downtrend. And if we see a break above the downtrend, that's positive. If we see a break below the support line, that's negative. Anyway, so this is actually a really good case of there was short-term positive sentiment. And when I say short-term, we're talking about 3 days, and then it failed fairly quickly. And you notice there was no volume during those days. Not sure what caused it. Could have been, who knows? It could have been anything. And it failed fairly quickly. I really want to see some good volume coming in on these days. And I'd prefer to see also a breakout. We didn't have that. And when you don't see the volume and it's not a breakout, And when I say breakout, I'm talking about positive financial news, share price at least a 3-month high, prefer a 6-month high, and high volume. We don't really have that. And that's probably why this just bypassed all my screeners. And also probably why the share price has dipped all the way back down to $2.75. But thank you for that. Just James Dane says oil's down because China is in depression and burning a lot less fuel, which is actually a fact of depressions or recessions. We tend to use a lot less fuel. So if you do see oil keep going down, that's actually a sign that the market is thinking, or even the economy is in a bit of a malaise. Richard Koo, the economist, did a great video on China's negative balance sheet recession. Infinite stimulus and zero interest rates won't be able to get it out of the depression. I am not the biggest fan of too much stimulus. I say just let it play out, but not play out absolutely, because recession is actually quite beneficial for society. Recessions can be, even though there's a lot of pain, that can be very beneficial for society in the longer term. And we just can't be thinking about now. We have to think about the future. And one of the reasons recessions are positive is because during recessions, a lot of companies go broke, and the companies that go broke tend to be the weaker ones. And what's left is the stronger companies. And then all our money, all our capital goes to those strong companies. Now, when you overstimulate, you still have all these weak companies in society, and they get a lot of the capital that could be used for these stronger companies. So recessions are very helpful for weeding out the bad companies, and what you're left with is really strong companies, and that could lead to really good growth until the next recession. But unfortunately, the governments around the world just want to stimulate their way out of recessions. We did that during COVID-19, stimulation and a lot of zombie companies. Well, that created a lot of zombie companies. And I would say a lot of those zombie companies are still around, not doing anything for society at all. They should have gone bankrupt a long time ago. Dykesy says, let me shed some light on Cann Group. I think it's just Cann Group. C with 2 N's, I think. Cann Group with 2 N's. Don't really follow this company all that much. So hopefully Dykesy will shed some light. In my view, the sale and rent back is big. It will eliminate all debt. Offers are around $80 million for a facility that cost share holders $120 million to build and land. It will help them grow dramatically, I hope, or they are on their knees. They're spelled Their. Don't want to become a grammar Nazi, but there you go. I can't remember this about Cann Group, so let's have a quick look. So it's based off what Dicey says, is they've sold their land and they're renting it back. And that's interesting. I've noticed a few companies do that in the past. So I'm assuming that's what they're doing. I don't know this company at all. I'm just looking at all the announcements they've released. Let's have a look at their most recent cash flow report. They released that on the 23rd of October, so not that long ago. This mustn't have looked good because I just moved on to the next one without even looking further, looking at the commentary. So let's have a look at the Appendix 4C. Cash receipts 3.6 million, operating cash flow negative 3.5 million. And I would assume, I don't think I have my spreadsheet open, and I'm assuming we haven't seen much growth in receipts. Another thing I look at here is borrowings up. So proceeds and borrowings 2.1 million, repayment of borrowings 150. So loans up $2 million. They have no cash on hand. They have negative cash on hand. So they're going to have to answer question 8 or part 8 of the Appendix 4C. How much debt do they have? $73.4 million of debt. So Dicey mentions it will eliminate all their debts. Yes, okay. I can see why they need to do this just based off this particular Appendix 4C. They have a lot of debt. And how are they going to fund that debt? Well, it seems like they're selling some assets or something. And here we go. So question 8 is the ASX wants to know if they're burning through a lot of cash and they don't have, or they have less than 2/4 of cash available based off their most recent quarterly cash flow, the most recent quarterly cash flow burn, they have to answer how are they going to fund the operations of the company moving forward if they're burning through all this cash. And you can get a lot of insight about a company and their thoughts about the operational performance. So if they have less than 2 quarters, they have to answer some questions. Does the entity expect that it will continue to have the current level of net operating cash flows for the time being? And if not, why not? And Cann says no. The entity expects net operating cash flows to continue to improve over the coming quarters. This improvement is expected to come from the following. Cash receipts are expected to increase in subsequent quarters following the recent launch of several new product ranges, which are gaining traction in the market. Okay, so there's a bit of speculation there. We hope. It's more of a hope. We hope. Then they're talking about R&D tax credit and almost $2 million, which is fairly high. The improvement in net operating cash flows is demonstrated as follows. And then they just go through how it's going to improve. Okay. Has the entity taken any steps, or does it propose to take any steps to raise further cash to fund its operation? And if so, what are those steps? So this is, are they doing a capital raising? And the company says yes. The company launched a non-renounceable entitlement offer on the 7th of October to raise $6.25 million. There we go, capital raising. And I suppose we saw that in here, yeah. There was a capital raising, yeah, prospectus, capital raising, yeah. I can't believe that just bypassed my brain. Anyway, other than that, I know nothing about this company. And yeah, eliminating that debt, that's the most important thing moving forward for this company. So whatever they're doing to eliminate debt is really important. And I agree with Douugh. If they can't do that, they are on their knees. But they're spelt rightly. Just James Dean says, please share. I think I've answered this. How would you draw trend lines for Macquarie Group? I'm sure I've answered this. I've definitely looked at it. Macquarie Group. Okay, so this is a daily trend. In fact, you got a low here back in November last year. There was a little, next low was in May. So if you just draw a line between those two lows or troughs, and then you just extend it. And funny enough, the next low hit that trend almost perfectly. So that's the uptrend. That's a daily uptrend for Macquarie. That's how I would draw it. Weekly. You could even do, maybe there's a weekly uptrend here. What I'd do here is you might just go like this. Yeah, there's nothing of note. I'll probably just use the moving averages here. Anyway, so definitely the daily chart, you do have this uptrend. And yeah, so nice time to buy Macquarie Group was back in that hissy fit day, 5th of August. Share price dropped 5.3% down to $196. Hopefully that's what you wanted. Just James Dean. Scott, Hazer, at last. They had an issue with the design which took ages to fix, but now it's going good, it seems. Their tech is revolutionary. So I'm pretty sure this is carbon capturing. Hazer, share price has been in a bit of a downtrend. I don't really follow this company all too closely. They've just released a presentation on the 23rd and also a cash flow report on the 21st. Does this company have any cash receipts at this point in time? I think they did have cash receipts this quarter. I think 409,000. Is this legitimate cash receipts from selling something? Let's have a look. Achieves 360 hours of continuous operation. They don't really mention anything about cash receipts. They're just talking about operations. First payments received for engineering services provided by Hazer to advance Fortis BC Energy. Okay. I don't know anything about the technology. All I know is they are carbon capturing, something to do with that, driving global decarbonisation efforts with the commercialisation of the company's disruptive world-leading climate tech. Their advanced technology enables production of clean and economically competitive hydrogen and high-quality graphite using a natural gas or biogas feedstock and iron ore as a process catalyst. Now, one thing I like to say, and I don't want to be negative, just because some tech could be revolutionary doesn't mean it's going to succeed. Yes, that is true. A classic example of that is Beta versus VHS. Beta was the advanced technology, but the VHS won. That's a classic case where Beta versus VHS. There we go. While Betamax offered superior picture and quality, VHS offered longer recording times and it was cheaper to produce. So the better advanced technology did not win out in this case. Although that's sort of, this is well in my past, and I don't know much about this. I've just heard that Beta was better than VHS. Anyhow, so I wish them all the luck. Actually, let's have a look at the chart. So the way I would play Hazer is just trade it. Because if this their technology does start to succeed, it start gaining traction, you'll see the share price move into a well-developed uptrend without doubt. Maybe we're starting to see that right now. The share price has bounced a little bit from 28 cents to 41 cents, but I'm just not there yet. In fact, I do have a downtrend line. Hasn't been in play for a long time, but it's there. And if we go to the daily chart, share price is still quite a bit below that. So not quite there yet with Hazer Group, but who knows? Company has a market cap of 94 million. So even the market is a little bit wary of this company. They're not sure if Hazer is going to make it. But if they do, the market cap could be significantly higher than 94 million. Scott says, and with Shape Australia, it may be worth comparing the chart versus established candle patterns. Okay, so one thing I don't usually do is I'm not big on like patterns, like advanced block, a tower top, or the bearish breakaway. I would say I'm definitely not knowledgeable on those sort of things. Not a recommendation, but I consider shorting on technicals alone, although I'm not. And then versus deep value getting even better, enterprise value operating earnings, about 5. When it's raining gold, don't take a thimble to collect it. It in. Oh, that's interesting. If it's raining gold, then gold will be very common and the price of gold will drop like a rock. Anyway, Shape. So I like to keep it simple. I do know a few patterns, like these flags, little flags or pennants or pendants. I even know the teacup handle thingy. Have never really seen one myself. Descending triangles, ascending triangles, that sort of thing. So fairly easy ones. And all I'm doing with Shape is it's in an uptrend. There was a day the other day where the share price fell a fair bit, but there was a lot of buying coming in during the day, and the share price has started to go up again. And I've put a sell price at 250. And to be honest with you, I put that price at 250 before that big down day. And the reason I put it there is there was another big down day on the 2nd of September, and the share price rallied the next day back up. So it seems like that sort of price is a nice little support level for Shape Australia. And then, lo and behold, it bounced off $2.50 on the 22nd of October. So all I'm doing with Shape is just riding the trend higher. Just ride the trend. And to be honest with you, I am also collecting a nice dividend. So they gave their shareholders dividend on the 29th of February. Shape Australia. What was the dividend? So their dividends, they also had another dividend. I can't remember this one. I do remember the share price dropping a fair bit when they when they went ex-dividend on the interim dividend in February, 29th of February. I was like, why is the share price dropped? So 29th of February, they went ex-dividend. And there it is, right there. There was a big drop on that day, 29th of February. Share price dropped 12% because they went ex-dividend. So just imagine you sold at about $1.75 because they went ex-dividend. And then 6 months later, you look at the share price of the company and it's about $2.75. Anyway, and they went ex-dividend last time on the 26th of August. Did the share price drop that day, 26th of August? There was nothing. There was nothing. The other thing is the dividend yield is pretty good, 17 cents, which means this company has a dividend yield right now. I'm going to calculate myself. 17 divided by 268. Could I do this without 7? No, it's too hard. Too much thinking. So this company has a dividend yield right now of 6.3%. So over the past, or since I bought this company, I should not neglect this. Since I bought this company in January, so we're talking about 10 months ago, I've not only received a nice capital gain, so we're talking about almost 50% capital gain, I'm also getting a nice dividend yield. So that's not bad at all. And the only reason I bought this was because definitely we saw the sentiment and the trend in the share price turning around. That's the only reason I bought. Didn't know much about the company. I just looked at the chart. I went, oh. The other thing is I like the increase in liquidity. The other thing to note is also the really, if you take even if you take away this spike in volume on the 19th, we have seen the volume increase since then, and that's actually a good sign moving forward for Shape Australia. And the price to earnings ratio is finally 14.4. But I have a plan. If the share price falls below 250, I will sell. If the share price keeps on rising, I will lift my stop loss point or price. PeterZig Redox has been consolidating range trading in the 3 to 330 range. And this is another reason why looking at these questions that were written 3 weeks ago. And the reason I'm saying this is because I've known what's happened to Redox share price since this particular comment was written. So it's been consolidating, trading in a range between 330. Charts show building pressure at the top of the range, watching for a breakout. So PeterZig gets the comment of the day award because you know what's happened with Redox share price since he's written that particular comment. I wouldn't say it's gone bananas, but it has broken out. So this is another company I am trading. So yeah, it wasn't really doing much. So I bought it $3. The reason I bought it, share price in an uptrend, share price dipped. I went, yeah, I'm going to buy some shares about $3. So I bought some shares. Share price did nothing for. So I bought on the 16th of May. Share price did nothing for 4 months. Just remaining patient. I had the sell price at $2.85. Share price briefly touched that sell point once, yeah, on the 5th of July. And then not much action, nothing really happening. They released their results on the 22nd of August. Initially, good reaction for the market, then negative. Share price actually dropped, and that looked bad for a few days after it, but then share price started to rally. And recently, the share price got to an all-time high at $3.80. So not really, if you just put like a line there, so it's range or trading in a range between 3 and 330. And the breakout, there was a couple of false breakouts. And the breakout happened start of October. And the share price just keeps on going up. Not a traditional breakout that I like to see, but this is just a technical breakout. And yeah, a nice looking chart for Redox. PeterZig gets the comment of the day. Rick Thellion, oil prices up on the idea of taking out iron ore production. No, Iran oil production, not iron ore production, Iran oil production. I don't think I have to comment on that. I'm on oil stock. So this must have been when oil started to ramp up high because of the tensions in the Middle East, 4th of October. Oh, let's have a look at the iron ore chart. Not iron ore, oil. That's the wrong one. Oil. Yeah, that's when oil went on a bit of a rally. That rally has petered out. Shanghai up, China stimulus. So this is around that time. Yeah, we had the oil going up, China's stimulus at the same time. So there were quite a few good performances in some of the commodities, oil and also iron ore. So we can move on. Oh, Magellan looks like it might be a bit of a wait to go up. I had a look at both this and Electro Optics on the chart. Electro Optic looks the better Kopok on the monthly at 200 quite bullish and True Strength Index. and MACD exponential also just below the center line. So it looks good for potential upside going forward. So this is another one where we can have a look at how these companies have performed in the last 3 weeks. So let's have a look at both of these companies. Magellan. I do like Magellan, and I think the main reason is because the share price popped up. So back on the 4th of October, yeah, the share price, the chart wouldn't have looked good. I wouldn't have been impressed with that chart back then. But for some reason, the share price has gone above this little resistance zone. I'd love to see the share price pull back to, say, 1080, but this chart is starting to look a little bit more promising for Magellan Financial Group. I do like this chart. Even if you zoom out, the daily and the weekly starting to look a lot better. This is a chart I like, a really long period where the share price has just gone sideways and we started to see the share price go higher. Not only that, when the share price got to 11.50 on the 21st of October, that was, well, the last time the share price was that high was back in September 2022. So a 2-year high. So I actually do like this particular chart for Magellan. I should write it down. Magellan. Should write it down because, oh, I did write it down. Yeah, I've got it down here on my, I do follow some companies quite closely and Magellan is on that list. And what's the other one? Electro Optics. So I do prefer Magellan right now. By the 4th of October, I was like, nah. But Electro Optics, man, right now with that share price, it's just, I don't see any significant trend here. The share price is sort of, it's going up and down, sort of in a trading range. And it's a fairly broad trading range. So between $1.25 and maybe $2. And if you go back to the 4th of October, starting to move higher, and then it got to $1.75 and then has pushed back. So this is sort of chart where I go, yeah, I just see nothing here. If anything, each successive high is a little bit lower than the previous one. So that shows me there is decreasing strength in the moves. And we've only seen 2 lows, but if the share price falls below that line there at about $1.22, that would be a pretty negative move. Anyway, so I will leave this downtrend line in, and we'll see if the share price can get above that line or get to a new high. Anyway, I'm not trading Electro Optics, but I'm willing to trade Magellan. Willing. Oh, here's another question about read book. So I should do a standalone video on this. So wait out for that. I mentioned that a few days ago, or maybe a week ago. Landy Lee, hey Kneppy, how do you calculate a reverse DCF? Also, what are your thoughts on AL3's chart? Okay, so with reverse DCFs, I used actually Guru Focus. I used to use Guru Focus, but I then, because I was a subscriber, and then because I unsubscribed because I thought their prices were too much, I was not able to use their, so if you put, so we'll go Alphabet, Google. They have, go to Alphabet's page on Guru Focus. They have a DCF page. You click on that, and they have the normal DCF, and you could use earnings per share, free cash flow, adjusted dividend. You've got all the variables here, so you can adjust the variables. But on the right-hand side, they have a reverse DCF model. So based off some of your variables and based off the growth, they say your expected EPS growth, 15.89%, could be achievable. So to justify the current valuation, Google will have to grow at 15.9% per year. And I think they can do that. I would think they definitely could do that. In fact, their normal DCF says fair value is $220 and current stock price is $167. The reason I brought up Alphabet or Google is because I had a look at Alphabet compared to CBA the other day, and I just can't believe CBA has a higher PE ratio than Alphabet. It's mind-boggling. I think that is just extraordinary because the potential growth for Alphabet is immense. The potential growth for CBA is extremely limited. Yet people in Australia are willing to pay a pretty big premium for CBA when you have opportunities to buy this high-quality company that has potential for significant growth in the future at a lower valuation is just mind-boggling. So I think, yeah, I actually believe that Google or Alphabet is pretty good value. Whether it's a buy for you, it's up to you. And how you buy shares, that's another question. So anyway, that's how I used to do reverse DCFs. It was very easy. I just changed some of the stuff. So for instance, if you say you want to decrease the growth of Alphabet, or no, the terminal growth. So all they need is growth of 15%, discount rate. So if you change that to 9% or 8%, you only need an EPS growth rate of 10.74%, which is definitely achievable. So that's how I used to use reverse DCFs. And to be honest with you, since I unsubscribed from Guru Focus, I've been trying to find an alternative. I haven't found one. There should be there's a lot of DCFs calculators out there, but I haven't really found one that I really, really like. Okay, so that's what I'll do. I'd use a calculator. Many things out there. Also, what are your thoughts on AL3's chart? AL3. Not bad. I don't mind this AML3D. The only thing I'm worried about this company is because the share price went on a massive run because Next investors recommended it, and I put that in quotations, because AML3D actually paid Next investors to recommend, which I didn't know until after this particular event. That's why the share price went on a massive run. Not because they hit any financials at the bar, it's because of this particular recommendation. The share price pulled back, but the share price has rallied. I do like how the share price has performed since late August. Now, the volume has dried up a little bit, but there's still a little bit of volume there, but nothing like we saw back in July. I don't mind this chart. Yeah, don't mind the chart at all. Has the company released their most recent Appendix 4C? I don't recall seeing it. So if you go back to their July's Appendix 4C, they released that on 24th of July. So they're releasing this particular Appendix 4C a little bit later than last quarters. That's not necessarily a bad thing, but it could be a sign that maybe this quarter is not quite as good, particularly if they leave it to the last day. So cash receipts 1.6 million, operating cash flow negative. So with this sort of financials, I would just personally, I would just leave it. I need to see a company making some strides. I need to see a company about to hit that inflection point of becoming profitable, cash flow positive, that sort of thing. But you could get in early if you're more risk taking than I am. You could see the promise in this company. That's fair enough. I have done a few videos on this company. I do think there is promise, but whether they can, whether they can I was going to say satisfy that promise. That's not a good way to put it. If they can realize that promise, that's a better way to put it, is another thing. Many companies, in fact, most companies on the ASX have promise. The most important thing is realizing that promise. That's why I prefer to wait for the inflection point, because that's when I can see there is greater potential the company will realize their profit. Not absolute, but greater chance. It's all about probability. So I'm not sure I'm there with AML3D just yet. But that's just because I'm a little bit more risk averse than I was. And I think that's also a byproduct of becoming older. I think. Thank you, Sensei. Thank you, Rick Thelian. Thank you, your Freeman. Talking about timestamps, how you appreciate that. Thank you. Dim Aselang 930. Awesome video. What do you think of Douugh Technology? Did you take profits before the down? Oh, yeah. Oh, well, I actually did take profits. Okay, I'm going to give myself a bit of a plug here, but also on the opposite end, yeah, I should have taken profits. Okay, so Douugh Technology. Bought some shares. Was there any other part of this question? what do you think of Douugh technology? It was interesting because I read that as, what do you think of Dough's technology? And I don't think much of their technology. Well, I shouldn't say that. I don't have any thoughts on their technology because one of the reasons I bought shares in Scully was because the shares, or the chart, looked pretty good. There was a nice little turnaround in the sentiment and the trend, the share price back in early 2023. It took me a while to get some shares, bought some shares at 83 cents, saw no reason to sell, and then I took profits somewhere up here. 250, yes, took profits somewhere in here. I don't know why I took profits, but I did took profits at 250 and maintain a holding. And I should have sold out of that holding because it's showing signs of weakness. Yes, I think the uptrend has come to an end for Douugh technology. So at this point, I should be selling out of the rest of my holdings. I should be. Share price below $2. I probably just want to see a bit of a bounce. I'd like to see share price get above $2, preferably at $2.10. If I see that, more than likely I will completely sell out of Douugh technology because the chart does not look anywhere near as good as it did for the last 2 or 3 years. Anyway, so I did take profits, but I probably should have taken profits. Funny enough, I should have taken profits probably around here, say later September. And if I did take profits then, I would have taken profits below the share price I sold out of originally. So even though I think it was a mistake taking profits back in early 2024, ultimately that was actually good timing because I think the money I took out of technology, I probably put back into some other trades and they have done well for me. So that's the other thing you have to look at. Don't just look at where the share price is now compared to then. How well has your other investments done since then? Maybe you utilize that money much better than if it was in Douugh technology, if that makes sense. Oh, this is when I thought the ASX was closed. It wasn't. So Video Associates, he's in South Australia. He thought the ASX was closed too. So it's not just me. Thank you, Groovy Shoes. Oh, Megaport. He made some great points. I can't remember what points I made. And then since I asked your Freeman Jamin, some questions, which I won't get into because it's not my question. It's not a question for me. Megaport. Let's have a look at Megaport. And I just want to see if share price or the chart's starting to look any good. They released a negative report, 22nd of August, so that would have been their full-year report or half-year. And the reason I remember this, because share price had moved into a downtrend, and I have been trading this, and was not trading this anymore at this point. And then I saw the share price the day before they released their results, up 5.1%. I went, oh, the market knows the results are going to be pretty good. And then, nope, the market got it wrong. Well, that's if the share price rose because the market thought that. And then they released their results on the 22nd, share price dropped 21% on that day. And some people might say, well, share price dropped 21%. This company's now better valued, cheaper. Now's the time to get in. And look what's happened to the share price since then. You could have bought on that day at, say, $9.50, and right now the share price is $6.93. So I try not to react when this sort of thing happens. When the share price drops after a bad day or bad announcement, I just want to see how the market reacts the days after. And the share price dropped the next few days. So that's actually a bad sign. We didn't see any rally. For instance, Elders, this is a classic example I'm going to use over and over again. Elders, back in April, released something negative. Share price dropped 24.4% on that day. But look what happened the following days. Share price rallied a fair bit. And now the share price has recovered. Not quite up to where it was, but yeah, that was an overreaction from the market. When it comes to Megaport, I think this bad report is just flowing through the market and it's taking time for it to digest. And that's why the share price keeps on dropping. I have no interest in trading Megaport right now. Even valuation-wise, not even sure if there's good value at here because share price just keeps on dropping. Now it's below $7. The last time the share price of this company was below $7 was back in July of 2023. So a 1 year high or 1 year low, more than a 1 year low. So this chart does look negative. But in the past, when the chart has looked negative, what's taken for the sentiment to change or the trend to change is a positive Appendix 4C. Not even sure if they release Appendix 4Cs anymore. I'm feeling they've been told they don't have to do that anymore. Did they release one in July? No, they're not releasing Appendix 4Cs anymore. So back in the day, a Megaport share price would rally or drop a lot based off their Appendix 4C. That was the main driving force behind Megaport, and they're not releasing those anymore. So we have to wait now for their half-year and full-year results. And at this point in time, or any sort of trading update, at this point in time, there's nothing in this chart to excite me. You're free, gentlemen. Hope this My Top Holdings becomes a series. Well, maybe I will do more of these videos. May 27, 2024. I could update it every year. Maybe. Just James Dean says, what does everyone do with the float in their trading account? AAA? With the float, you mean the extra money in the trading? I just let it sit there so I can take advantage of it when I want to. Is that what you mean, Just James Dean? Oh, I've answered that. I know I've answered that because I think I did a standalone video on that. Yeah, I did. I hope, Sensei, you enjoyed that standalone video. Brandon was worried about me. So this is what I was talking about earlier. If I don't release a video, some of you might be worried. So some of my ASX Daily Rundown videos, I might release those a little bit late because I forget to press the send button in YouTube. That's all it can take for me, for you to receive the video late. Or if maybe I'm busy all day, which doesn't happen all that often, I might actually record it a little bit late. But the most likely reason why I might not have released a video is because I forget to send the send button. If you go to the content in YouTube Studio, you have to save or publish. So usually it's private or unlisted before I send it because it's still uploading. And then when you want to publish it, you have to press the public. And that's sometimes I forget to do that. Sometimes. And I'm going to end this video here at 1 hour long because I have to go back to the comment section now, and it'll take me a while to go through all the comments to find where I ended. Anyway, so if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.